Vincenzo's Gold Crypto Investing, this August the 5th, 2025, early afternoon update here from the great state of Michigan, where the Fighting Wolverines are traveling into the Lion's Den in Norman, Oklahoma, tomorrow night, 7:45 Eastern Daylight Time, to take on the Oklahoma Sooners, just as the Bitcoin price was trying to take on the major 3.5-year pattern resistance. And look at that again. And this is something we've been telling you since we broke down that it would be a critical week, because you can see we attempted to break down the first time and peak below it back here on the 26th, quickly came back above, right? See that? We quickly came back above. But then ever so more importantly was on the retest, we fell and came all the way down to the swing low of about 107,000 and change. Then we got just below it, sold off to below the 100-day moving average. Then pumped back up the last 2 days, and look at where we hit it. Exactly. We haven't moved this line in 3.5 years. Hit it exactly on there, and then quickly flushed down. Look at that on the hit. And these are starting to build the case and build the analog and build the momentum and build the new theory that's turning into fact. Look at that. It immediately hit it and dropped $3,000 or 2.67% off the rejection. So this is starting to build a case that this pattern is giving you the tea leaves and the signs and the signals that the overall structure of the Bitcoin price is changing. And we could even see that from our 3.5-year rising wedge. And now just bear with me and give me some latitude here, right? So look at this right here. When we started this, we came in, hit lower support, pumped up to upper resistance. Hit it the first time to confirm that we had some resistance there. It traded back down to lower support. Then the second pump up to upper resistance, we got the farthest up into the upper resistance, actually made a big, gigantic fake out here starting in February of 2024. And then it failed to hold back in the spring of 2024. You see that big blowout where it attempted to break out of this pattern. Then it came back in it, fell all the way back down to support, right? A couple of wicks below it, but for the most part, just hit it beautifully. Then you came back up for the third rally and noticed besides a couple of wicks that tried to attempt to break out, it got hit and rejected right at the upper resistance. Then it came down to lower support and had the big fake out back here in April of 2025, where we got all the way down to about $74,000, attempting a breakdown of a structural market change right here, right? But then we had the last 2.5 to 4 months of buying. But look at where this came up to. We created 2 new all-time highs, but notice how we were essentially just straddling the lower support of the rising channel. We didn't come up to the upper resistance, right? So that's very interesting, because that is showing the pattern starting to become exhausted, playing out through the pattern to where maybe potentially this time, after we figure out what we're gonna do, if we're gonna dance back around, this might be a big structural change. Because if we did something like that and from where we're at now came back to 79,000, that would be a confirmed breakdown out of the pattern, not just a attempted breakout, right? So it's very interesting. And what we're going to notice over the next several weeks is we're going to put in the weekly moving averages. So we're going to move that, which the weekly moving average, and you do know we make these in red. So we got to make that red because that's the 50-day. And that's a critical support level right there. But that's the 50-day in the weekly time frame. And then we do lock those. Since this is so close to the 74,000, we're just going to unlock, and we're going to move this up to here, because this is going to be our weekly time frame. And then we're going to lock that. We'll delete that. We'll move that up into here. Oh no, that is the daily, I believe. And then we're going to have to create a new line. Clone. Unlock. And then the 200-day and the weekly is right here. Make that green. And then we'll lock that. All right. Now if we go into the daily time frame, and you can see where the 200-day is sitting up here just above the critical 95,000. And you'll see now that makes more sense now why that 95,000 was sitting there where these moving averages were, because the critical monthly time frame moving averages there. But you can see the 50 now is the 50 now is threatening some of a yet. It just hit it. We're gonna lock that. The 50-day is almost threatening, and it's actually getting just below it now. And then it's threatening to maybe want to do a bearish cross. And if this does get rejected, like we've been talking about, your next move down is the 100-day move, the 200-day moving average, excuse me. And then you're coming down to 95,000. And that would be where you're going to start to threaten a pattern structural change. We're going to want to go ahead and change that. A pattern structural change if you broke the 95,000, because then there's only brief support at 90, and then you come straight down to the 79,000, which is the weekly time frame moving average in the Bitcoin price. So we're going to pay close attention, as much attention as we can to this over the coming days. The same thing with the Ethereum price. And the Ethereum price tried to make a move up today, collapsed back under its own weight, just like the rest of the market is. This is actually supposed to be, come on, up here. We need to start locking these. That's why I always lock stuff that should never move. We got quickly rejected below that. You can see where we had a big reversal. It's been about 5% from the top of this candle on the daily candle. Yeah, 5.33%. And see, it always makes 3 3s and 6 6s and 6 9s and the devil's number, as you guys call it, right? But I think we're coming back, like we've been talking about the last several days to a week. We're coming back to this neckline support, and we'll zoom out here to show you what we're talking about. We're going to get rid of that, and we're going to zoom out of that. But this is the megaphone neckline support that we're talking about in a brief summary. You can see we started here in March of 24, hit it. Then we hit it again in December of 24. Then we hit it and broke out of it in August of 25, and now we're holding it as support. And then you can see it's the megaphone because you have descending lower resistance. A technical breakout is $10,000. It doesn't mean it's going there right now, but that means if this pattern over the next year or two continues to trend up, that is where you would look for an overall target to go. But in the meantime, the major thing that you're doing right now is you're retesting the moving averages and the major megaphone support. See how it was resistance, and then back there, a brief resistance here. Now we're coming on it to hold it as support like it did right here just after the first hit. And then we breached a new all-time high and came back. But if you don't hold, and I think you are going to hit this, so you got about 4% more, I believe, to come down. And then you could have a ferocious rally. But if you don't bounce successfully quickly off of that and you actually get through this, your next level of major support would be, if we zoom on in here, I just wanted to give you a brief synopsis and an understanding of what I was talking about there. But you would come into the 100-day moving average, which is 35.79, and the major support level, which is sitting here at the top part of the screen, support and resistance box, which is 35.15 down to 3,053. And from current price, if you had a worst case scenario, that is a 29.11% fall, but we're not calling for that now, but we're just giving you the baselines of underneath critical support and critical resistance. And first of all, we think you're coming down to your critical support, which is right here, and we'll do a current Vincenzo industry exclusive targeted move, or a percentile move from the current price on the dotted line. We're at about 4% more down that we have to go, and I believe we are going to hit that. But we'll continue to follow it. XLM is the same thing. You can see XLM actually got back above a critical area. You can see where the moving averages are. Look how fast they're descending now. See that? And how they're squeezing the price. And then you got the 100-day moving average, which is moving just above the critical green support and resistance box at 36 cents. You can see the price is sitting just on the 36 cents with the overhead 50 falling down. If you can't get back above this and can't get back above the critical 50-day moving average in the daily time frame, it's going to shoot you down to the 200-day moving average, and then eventually down to the bottom part of that green support and resistance box down there at 31 cents. And you can see that's just above the 50-day moving average in the monthly time frame in the XLM at 29 cents. And that's a target that we would absolutely look at, along with the 24 cents, which is the 100-day moving average in the monthly time frame, if we can't get some critical support and get a nice bounce. But I feel like in the short term, that red line we have drawn there down to the 31 cents with a brief consolidation and a stall out on the 33 or the 200-day moving average in the daily, I think in XLM, that is where we're going in the short term. If we look at the XRP price is identical, you can see this is trending to the downside. We have our overhead 307 major resistance. We have the 277 100-day moving average as your critical support. And as we've been talking about the last several days, the call has remained the same. After we've come off of this local high up there at 366, we couldn't hold the new 307. Then we got traded sideways in this descending channel. The track shows it going to the downside. The moving averages in the daily are starting to come to the downside. It's starting to be used as major resistance is the 50 and the 307. We're sitting just above the 100-day moving average at $2.77. We're sitting at $2.81 currently. And if we slip this with this descending, you can see we're forecasting this tightening, which we drew this out 3 days ago now, and you can see how it's tightening and it's playing within this range. When it finally comes to the apex here at the end of the day today, it's going to have to decide. And if it breaks to the downside, it's going to come to the 200-day moving average and this $2.55 critical left to right horizontal support and resistance in a similar fashion, just at a different price as XLM. The patterns are the same. The movement is the same. The volume is the same. They are the same, right, as far as the price action goes usually. And then if it can't hold, you would expect to bounce off the 255 and the 200-day because there will be buyers, and it is a critical support level from back there. And if we kept scrolling back, that was a critical support and resistance level, which was a resistance level for about 5 months, right? So you would expect a bounce off of this level or around this level. Maybe it would come to the 246, who knows? But you would expect to bounce back at least to the 282 off of that. But then if you couldn't break that and break the 307, it's screaming that it's going to want to come down to this $2.11, which is just above the 209 old neckline support. So we're going to get rid of that because the new major support level in that area is right there at $2.13, which is the 50-day and the monthly time frame. So we're going to continue to follow all this for you. We could be seeing a structural overall change across the board. We don't know yet. We can only speculate, or this could just be a retail manipulated shakedown and shakeout before the Fed starts to bombard interest rate cuts and jack up asset prices. Peace and love. The Rock Eyebrow, Jay.